Hello and welcome to the Mutual Fund Show. I'm Niraj Shah, and over the next 22 minutes, we'll talk about two key aspects. One is a small opinion that I want from our guest today, because our guest is as frank as they come. And the opinion is on the reportage of the mutual fund flows that come in, because there's a wide difference between gross and net. Some hearsay, some declared numbers, at least the month of June was declared numbers. I would love to know her view on that. Of course, she is the CEO and MD of the house which runs a Midcap Fund which has had a very long history of success, and therefore would love to understand what would constitute or what would go behind identifying what could be a long-term success in the mid-cap space on the mutual fund side. Radhika Gupta Johnson on the show today. Radhika, great having you. Thanks so much for joining in. And I omitted a third part, which I'll talk at the end of the show, Radhika, about why is it that after the mango season is over, that the lady is wearing a mango-colored sari.
Hi, good to see you, Niraj.
Yeah, we'll talk about it at the end for sure. But Radhika, a slightly, not an unpleasant, but I was perplexed because, yes, it stays for a while, but today I saw a depiction of some reported numbers. Now, they're not official, because my colleague Anne tells me that the official data that was released by Amphi was in the month of June on the call, when they said that the gross number was an X number, 20,000 crores or whatever it may have been, and the net number is lower. I presume that's true maybe in some fashion, if not the exact degree, for the remainder of the months of the current calendar too. I really want to know, because we kind of report when we see those numbers, right, that we are seeing 20,000 crores worth of SIP money coming in every month. I mean, realistically, that's not right, because it's not 20,000 crores, because there's stoppages, cancellations, etc. The net inflow is lower. Why not report the net number?
So, look, this is a little bit of a tricky subject. You have to break down this number. Now, gross SIP is, say, I'm doing a lakh a month SIP and I'm registering it as Radhika Gupta. I report that. That's your gross SIP flow. Now, that SIP goes into a folio like Edelweiss Midcap Fund. And, eventually in that folio, I accumulate 20 lakhs by doing an SIP. And I start redeeming from the folio, or I start stopping my SIPs, and a net number is reported. So, by the way, Niraj, I think all of us have always known and looked at this SIP number with that lens, because otherwise the math doesn't add up. On monthly basis, the net inflow into mutual funds is 25-30,000 crores. Gross SIP is 20,000 crores. I mean, more than that comes in NFOs, etc., etc. Now, is this gross and net, should net be reported? I think it should be reported. I think a lot more data in any way, reporting is a good thing. What does this, in fact, by the way, on a different note, I think flows should be bifurcated into retail and institutional flows, because a lot of times the media reports equity numbers and you don't realize a lot of the ETF flow is institutional. So I'm all for more transparency and reporting, because these days I think the amount of interest in the number and the fact that this data is used for a lot of decision making, I think we can do more transparency in reporting. It's always welcome. What does it indicate? I think what it indicates is this, that people who are doing SIPs into funds are also redeeming from those funds. Now, some of that, Niraj, is natural. I did an SIP towards a goal to buy a house, and eventually I redeemed from that folio to buy a house. But I also think SIP funds tend to be your more vanilla funds. Now, the unfortunate part is people are redeeming from those kind of long-term investment folios, and half the money coming into the industry comes in sectoral and thematic funds. So people are veering a little away from my favorite word, dal chawal, into exotics, and redeeming out of dal chawal to do exotics.
No, sorry, just one follow-up there, Radhika. But, in some sense, then gross, and correct me if I'm wrong, but in some sense, gross then becomes a bit of a meaningless number, right? Because yes, you are reporting gross, and yes, all of these conditions are there, but on an average, every single month, if the net number is half or 60% or what have you, might as well show that as a current depiction. I'm just playing the devil's advocate here.
I actually think you should look at both. Like in my own business, I'm also the CEO of a business. I look at our gross equity flows, because that gives a sense of whether people are selling my product. right? If my gross flows are increasing, then that gives a sense that more and more people are buying my schemes. But finally, I make money, I make revenue. What stays is my net flow. So I actually think you have to look at more both. I think a gross SIP number indicates that more and more people are participating in the SIP story. The number of SIP accounts is going up. That's good. It represents a widening, because one of the things our industry also needs at 5 crore folios is a widening of the consumer base. So to me, gross represents that from a business point of view. Net finally represents the retention. Now, Niraj, it's not that the net number has not grown. Even in the data that you sent me, the net number has also grown from some 5 odd thousand to 8 odd thousand. So it's not that the net number has not grown. My point is you need to look at both.
Got it. Yeah, I completely agree. And in fact, in some sense, I felt that because the net number has now grown to what a gross number was 2 years or 3 years ago, right? It's a comfortable situation. I mean, just that the correct reportage. It's just, I mean, at times I feel that when I'm arguing with somebody and talking about it, that look at the Indian markets, they are standing on 20,000 crores of sticky SIP inflows every month. Just factually, that is not correct now, because it's not 20,000, it's about 9-10,000.
The better way to look at it is this: how much net equity flow comes into the MF industry every year? Whether it comes via SIP, whether it comes via lump sum, does not matter finally. That number, I think, is usually 3.5 lakh crores. And then, of course, I add money that comes into AIF, PMS. That 5-6 lakh crore is the demand for equity that comes in every year. Right. By the way, contrast that to supply. That is, I think, a better way to look at it.
Agree. Okay. It's great. In 2 or 3 questions, we kind of agree on the same point, which is always good. But yeah, it's a topic that is up for debate with other opinions coming in sometimes. But I'm glad we see eye to eye on this. The other question, Radhika, that I have for you is this, right? We were looking at the flows that have come into mid-cap, small-cap funds, or how have you, and what some of the mid-cap funds have done over the years. Now, there's this data point put out on a social media platform by somebody, which highlighted that as of August 18th or 19th, which are the funds which did really well over a really long period of time in the mid-cap side. Your name features that, but that's incidental. I just saw that Motilal Oswal, Kotak Emerging, Quant, you, HDFC, all have done really well over a 10-year frame. I would love to know, Radhika, because it's great for people to come in via the SIP route or the direct route and stay invested, because if you can make 10, 15, 20% for 10 years, then it's a serious wealth creation. What goes behind identifying what could be a mutual fund scheme that could deliver for a really long period of time?
So firstly, I mean, we've run this mid-cap fund for the last 15 plus odd years. It's our oldest and most flagship fund. But I do want to spend a minute talking about the mid-cap category, because I think there are myths in the mid-cap category. And I think the mid-cap category, it might be a little bit of a misnomer, because if I told you the average market cap of companies in our mid-cap fund is 58,000 crores, that's about $7 billion US. These don't sound like mid-cap companies anymore. So one, you have to remember that the mid-cap category is very unique in India, because it effectively represents the next 150 companies after the top 100. That's SEBI's classification of mid-cap. And by the way, in our mid-cap fund, we don't do the thing of taking cash calls and hiding in large caps. And, so we are very clear that when we run mid-cap, we run it like mid-cap. But I think mid-cap is a very sweet segment for investors, because it is companies that they're not emerging companies anymore. They are market leaders. They are established business models. I mean, the universe today starts at 20,000 crores, goes to 70, 80,000 crores. But they're not companies that are so large that the growth alpha and the juice has gone away. So I actually think the next 150 companies in India that comprise a majority of these funds is a very big sweet spot. In fact, I keep joking, it's not a very popular opinion, that if you look at the 10-year return flashing on your screen of mid-cap funds, net of fees, that is a return that is very hard to beat by even many unlisted funds. I mean, funds catering at 20%, Neeraj, post fees and not a little bit less than that post tax. That's a pretty hard number to beat. So I think this category is a very nice sweet spot. I almost think it's a little bit like Goldilocks. Small cap still has a set of risks. Large cap is a little too big. Mid cap, in my view, is the just right category.
Okay, so okay, and I completely agree, Radhika, that 20%, even with fees, is a very difficult number to beat. Net of fees is extremely hard. How does one identify? I mean, 10 years back, I didn't know that the Edelweiss Midcap can do what it does. Maybe 3 years into that performance also, I might have thought that, oh, can I shift to somewhere else? Similarly for Quant, similarly for Moti, similarly for Kotak. And there are others who may not be 20%, but even 16, 17% is not a bad number. How does one identify? How does a viewer listening to you right now, what are the checks and balances? What are the tools that he can or she can use to identify that, okay, this might be a fund which is poised to give good returns?
So I think in this category, there are a few things that I would do, and I invest in this category quite a bit myself. One is that midcap is a stock pickers business. So really midcap is about how the fund is doing stock picking, and you have to spend time on the investment strategy. For instance, in our fund, we have a well-established FAIR framework where there are three cornerstones. Forensic analysis is very important because this is the mid-cap category. Pricing is very important because you have to pay the right dollar, and robustness of business model is very important. So I think understanding the investment strategy is extremely important. It's a very basic thing to say, but I think it is extremely important because mid-cap is a stock pickers category. Second is, I think the construction of what comprises a mid-cap fund is important. Now, people have very different approaches. As I said, we don't take cash calls. When we want to do mid-cap, we want 70% of the portfolio to be mid-cap, and the balance is emerging mid-caps, which is small. Some people have large cap exposure. Some people have, all kinds of things going on. So for us, mid-cap means mid-cap, and I think that's one of the reasons that has worked. Liquidity, I think, is very important in the mid and small cap space. I know SEBI has been talking about it since March, but since the beginning of our history, I think having high liquidity conditions in midcap is important because in midcaps, the key is you don't want to catch falling knives, and when things go wrong, you want some amount of protection. So mistakes in midcap can be very costly. So I think liquidity is important, and liquidity is good in good times and disappears in bad times. So I think liquidity is extremely important. I also think, and Niraj, this has been my rant, people are very obsessed with short-term performance these days. I like to look at one performance metric. If you want to look at one performance metric for a mid-cap fund, look at rolling 5-year returns because you're not investing for less than 5 years, but rolling returns gives you tremendous consistency. So I feel less happy when our funds rank well on these discrete return metrics that you put up, and better when they rank up on rolling returns. So I think these are the four things. Actually, if you look at rolling returns, you will be pretty accurate.
Okay. One quick follow-up question there, Radhika. There are a lot of people who come in, rightfully so, talk about looking at slightly difficult to calculate, ascertain ratios, the Sharpe ratio, so on and so forth, etc. Have you gone into those? I mean, they might make you an even better investor, sure. Maybe not. I'm just trying to understand. But do you make use of those ratios as well when you're going to choose out those funds?
I look at how volatile the fund is very quickly. So I am not too much of a ratio person. As I said, I look at how volatile the fund is. I look at extremely bad years. What is Sharpe ratio? It's a way to indicate how much risk you're taking. So, Sharpe ratio feels very vague to Indian investors. I like to simplify it. I look at periods of extreme drawdown when markets have done badly. How badly have these funds done? So I tend to look at that, but rolling returns, Niraj, captures everything. So if you take the 5-year rolling return, the average tells you what you're likely to earn. The minimum tells you the worst that has happened to the fund in 5 years. The best tells you the best. So if I look at worst rolling return and average rolling return, honestly, in that single statistic, I get all my answers.
Okay. This is good insights. Thanks for this, Radhika. Before we wrap up, though, Radhika, I'd love to know, what I started off the conversation with, the reason behind a mango-colored sari once the mango season is over already.
So mango season is not over. UP still has some langras and chausas going out, and the sari is incidental. But Yes.
No, but there's something related to mango, right? That you are writing, if I'm not wrong.
There's a mango announcement that was made an hour ago. I think I've always had requests to put all the financial wisdom, nuggets, stories into something that is an easy money guide for investors. So we just announced the release of our new book, Mango Millionaire, that comes out in spring 2025. And I think the title is a tribute. To the what I call Aam Janta, the mango people of India. And India will produce so many millionaires over the next decade or 20 years. It's going to be a golden period. And so it's a guide to create more mango millionaires out of India. And we really, and it's supposed to be simple and easy with low jargon and not too many words like sharp ratio and stories and analogies that people can understand.
Okay, so I'm looking forward to this. You said this comes out in spring of 2025.
Yes.
So somewhere around April or May is when, or maybe March, April is when you would see the release of this.
Maybe when the Alfonso season. Maybe it'll debut with the Alfonso season.
Not bad. So maybe we can do the debut with the Alfonso mango in our studio with the mango as the backdrop.
Done.
Sounds good. We'll do that. Radhika, all the best and keep giving us your insights all through. Thanks so much for taking the time out and being with us today.
My pleasure.
All right, that's the view from Radhika Gupta. So look at 5-year rolling returns, and that is probably one of the best things to do. Don't complicate it too much. We slip into a break, but on the other side of the break, Anand Ladha joins